Hello guys, Stocks here. So in this video, I'm going to talk about what's the most effective way to trade the recent biotech runners and also how to really manage your risk. So no takers for this video, but just going through my personal observations and the method of trading them. Specifically, going into the new years of 2023 after I observed the entire year of 2022. So in 2022, especially after August, pretty much all of the liquidity started dropping, and we haven't seen a ticker that has any type of big edge in the last 4 months or so. So ever since BBBY and AMTD, no actual tickers that can trade 200 million volume above $5. So in this boring period, and there's a lot of tickers that's going either has trading 800 million in terms of dollar wise in one day, or trading 30 million in one day. So there's a massive jump from how much you can trade in one day. So the data itself, by tracking statistics, are not very stable. I've been personally getting a little bit annoyed with it because, well, if there's no stable statistics and every day we're going up $800 million range to $30 million range, then it's impossible to get a hand of, well, sometimes if the stock trades, let's say in average it trades around 600 million, then max it trades 800 million, you can kind of get the hang of how to really approach into the best entries and to use that dollar wise to predict how much the stock can go and where's the momentum is likely to shift. But in this, especially in the last 4 months, it's not like that. And when the data is not stable and when there's not enough plays, a lot of people feeling really FOMO, and they've been forcing trades left and right. I have seen tickers that gone up 6,000% in one day and had the offer in the next day. People did not catch the downside and they were forcing trades going to the next one. That's how COSM happened. Then they're forcing trades on KALA. So you can kind of see traders' behavior based on how much volume is being traded, and also the chart actions as well. So in terms of how to really manage your risk, it's pretty the normal way. Set up max loss for yourself, but I think the most I and you can we both can improve is the timing, because I have noticed that pretty much for all biotechs, when they push, especially when they gap up and over 50-70%, when they push into the into the upper range and start consolidate, when they consolidate past the 1 p.m. 2 p.m. area, that's where stock gets really tricky. Sometimes it does a fake down or a fake out and it shakes you out left and right, and you will end up with a big loss even though the stock didn't even move at all. I would prefer that filter out all of the trades. If you're still in a trade passes 1 p.m., you just cut it, stop trading it. I think that's the best and most effective way to trade biotechs, especially when they form consolidations like that. And also in terms of tracking statistics, I'm seeing that technology sector and biotech sector, they have completely different fading percentages in the same pattern. So in the future, I would recommend for you guys to build a separate spreadsheets for biotech sectors alone, to be able to get the average statistics or how much you can push, how much you can fade on intraday level. Typically, biotechs are not suitable to hold for a week. Typically, whenever you are shorting a technology stocks, they can just fade all the way down 75% from the top, and there's no headache about it. But sometimes biotechs can come all the way back, slow grind, break the day high, and you have no idea how to trade that. In the future, build your own separate statistics sheets for biotechs, and I think it's going to be really helpful. I think it's personally helped me for in the last couple months, so I think it will be helpful for you. And that'll be the end of this video. Thank you very much for watching, and make sure to check the course link in below, and I will see you guys in the next one.